All right, and we should be live. I think there's a couple people in here that were already waiting. Let me know if you guys can hear me okay. Just getting the post out and everything. If you guys can retweet that, give the video a like and a share or what have you, that would be awesome. Loud and clear. Awesome. Thank you, Commander Whitloaf. Whitloaf. The username checks out. We're just getting everything brought up here on my screen. Just give me just a minute here. Oh, good. I didn't butcher it. That's good to know. All right. My camera, for some reason, is a bit laggy, and I think it's because my floor lamp on my right-hand side is not working for some reason. I have to get a new floor lamp. It finally, after like 10 years, it burnt out, and it just doesn't work anymore. It's not the light bulb, it's the actual wiring in the lamp. So since that's not working, I think it's not enough light in the room. But anyway, I mean, we'll just go with it here. Let me pull this off the screen. Hey, there I am. Awesome. Yeah, see how the video is like a little laggy? There's like trails with my hands. Yeah, I don't like that. It's like, it's normally not like that. Normally it's like super crystal clear, no lag or anything. It's just a lighting issue. It's just the light's just not being balanced correctly because I don't have a light on this side right now. So unfortunately, it is what it is. We'll deal with it. It's all good. Tonight, I am drinking some nice whiskey from my decanter. This is Jefferson's Ocean Voyage 28, I think. So let's see. Yes, Voyage 28. 03. There we go. All right. Simple desk lamp with a piece of paper over the light right next to the camera. Well, I have one light over here that's like mounted to my desk with a clamp that's like an actual LED panel. But it doesn't, since I only have light coming from one side, it like doesn't, and it's super dark over here. It's like throwing the camera off, like the webcam trying to focus. It's not working. I'm not investing like $4,000 to do a stream once a week in a DSLR camera. Sorry. If you guys want to donate to the channel, or if some of you guys are high rollers and you want to physically buy me a camera, let me know privately. I'll be more than happy to accept that. But yeah, $4,000 for a camera and like a nice lens. I'm not doing that to stream once a week. A 4K webcam is more than enough. So we'll go with that. But anyway, so this is the whiskey. Here we go. Nice color in this. Got a couple ice cubes in here. Yes, I know. Troll me. Yes, they're not clear ice. I don't have any clear ice right now. Cheers. Man, that's really good. It's a little sweet. It's a little on the sweet side. So Voyage 28 from Jefferson Ocean, they went through the Baja Peninsula, through the Tropic of Cancer, down to the coast of Central America, and then back up, and I guess to California. That made like a big round trip or whatever. So that's where that whiskey's voyage came from, which is pretty cool. Went through the Panama Canal and all of that good stuff. So pretty interesting. If you guys want more information on that, or you guys want to read it, that is the link, and you guys can click on that and it'll tell you more information about what Jefferson's bourbon is, and what the voyages are, where they went, and all of that cool stuff. It's pretty cool. It's one of the last whiskeys of its kind that's actually brewed and distilled in casks on a moving ship in the ocean. So it gives it a very distinct flavor. I'm not going to get into the background of it, but it's really good stuff. Anyway, so we got a lot to talk about today. I'm not going to go into the ETF stuff in like excruciating detail, but it is basically ETF madness again. I forgot who posted a chart, but there was one person on crypto Twitter that posted a really, really good chart about all the major events with like Bitcoin being listed on CME, like CME futures and stuff like that, the CBOE futures, and just kind of like how the markets reacted after those announcements. Same thing with like all of the ETFs in 2019, like that pretty much like marked the top. Same thing in 2017 with the CME futures, it kind of like marked the top. And then the market's kind of reversed. So I know that that's kind of a thing. Now, am I saying that this is the top of the market right now because of the ETF madness? No, I think that there's probably a lot. Every time that we see some ETF madness like this over the years, like last time, I guess was in 2019, it's 2023 now, it's been a few years later. Every time that it happens, I personally feel like there's a higher chance of them actually getting approved. Obviously, Bitcoin's not going anywhere, right? And just years and years and years pass, and then more ETFs get filed. And, you know, every time that happens and Bitcoin is still here, it just makes sense that eventually they're going to get approved, right? So there's a higher chance every time that there's a bunch of ETF madness that it's going to get approved. So that's really all I really wanted to say on that. If I can find that chart, I'll post a link under the under the post on Twitter. I'll like link it to there and quote tweet the guy who put it on there. I got to dig for it. I don't know the guy's name, and I don't think I follow him either. It's like a small account that had like 1,700 followers or something, and he had this amazing like monthly chart of where all these things happened and how the markets reacted. It was pretty in depth. It was really good. So if I find it, I'll let you guys know. But in the meantime, thank you all for joining. Those of you that are new, those of you that are not so new, help me out. Make sure that you subscribe to the channel. I usually do this every Friday unless life happens or like I'm on a vacation or something, which happens more during the summertime than the winter, but whatever. Normally every Friday, 9 p.m. Eastern, 8 p.m. Central. So smash the subscribe button so that you guys get notified of when I stream, and hit the like button. You know, it helps get the the video out to more people. So do all the social media things. But anyway, the first thing that we're going to talk about, besides the ETF stuff, because I kind of had an itinerary of what I was going to be going over tonight. First thing was the ETF news breakdown. I kind of went over that in some brief detail. Hey, Carol, what's going on? I just saw that message now. Sorry for the little delay on that. Anyway, went into the ETF news very briefly. So the next thing I want to get into real quickly before we start looking at VENOM algo trade results, and then I'll get into the actual markets, is a breakdown of legacy events that we're going to be expecting for next week. So let me bring up my screen here. Boom, here we go. So I don't know if you guys are going to be able to see this in too much detail, but most of the week is pretty quiet besides other things going on in other markets that are global. Whoa, what happened to my little, there I am. Hey, I was like, where'd I go? So this is Monday through Friday. So obviously Governor Bailey is going to do a speech. So, I mean, that doesn't really pertain to us. It might affect global markets, probably not necessarily Bitcoin, but we'll have to see. Tuesday, also very, very quiet for the United States. You know, you get the unemployment, you know, in Britain and stuff like that. And consumer prices, you know, CPI and stuff for euros. And there's some stuff going on in New Zealand, in the Kiwis. But for us, our big day is going to be Wednesday, right? So we're getting CPI numbers, all of the things CPI, and Canada is getting theirs as well because it's, you know, North America. So all of those numbers are going to be coming out for us. China gets their trade balance sheets and exports and import numbers, which is kind of important if you look at global trade, or like to take supply chain into account with your fundamental research. So that's kind of important there if you guys pay attention to that. Thursday, also pretty quiet, except we get our PPI numbers and jobless claims. So Wednesday and I guess, what is this, Thursday? So Wednesday and Thursday are going to be the two big days, right? We get the CPI numbers, we get the PPI numbers, and we get the jobless claims, the jobless reports too. So those are going to be kind of important for us. And then Friday, again, kind of quiet here. The Michigan Consumer Sentiment Index, it's a preliminary. So it's rated as like very important here, but it's a preliminary. So it's like not really super important in my opinion. But that's what we got going on next week. So the main thing for next week is definitely going to be the CPI numbers. Okay, that's going to be very important. That's something that the Fed looks at. That's something that we look at. That's something that I look at personally. That's something that a lot of analysts and anybody that's really into economics and fundamentals and stuff are looking into. Those numbers are taken into account in a lot of different statistics that are used elsewhere, specifically with the Fed when trying to calculate, like if they're going to continue rate hikes or whatnot. Now, we don't really have to worry about a rate hike decision anytime soon, although we do have one this month. The next one is actually on Wednesday, July 26th at 2 p.m. I will be streaming for that. I always do those live, so make sure that you guys stay tuned for that. I think I'm probably going to live trade that one too. We'll have to see. Lately, these Fed decision meetings have been very, very hit or miss. They've either been super, super volatile or they've just been a big nothing burger. So that's why I haven't really been trading them. The last, I think, 2 or 3 meetings, I haven't traded them. But for the last year and a half before that, I mean, I traded almost every single one of them. And that was always one of my biggest days of the month when those occur. So usually a big event. I plan on live trading and or streaming that event. So stay tuned for that. Again, another reason to like and subscribe to the channel. Anyhow, I think that's pretty much it for that. So we're going to move on here and we're going to take a look at, what did I have next? The VENOM algo weekly trade. Okay, so this is pretty much what we got. Now, this is the actual algo. I obviously am going to take some of the things off the screens and just show the actual trades here. So from the beginning of the week, I guess would be the 3rd. So that's actually back here. Okay, so before the beginning of the week, we actually ended up taking a long. It didn't snag the exact bottom. You can see this little blue arrow over here. Okay. And before that, there was a short that was pretty successful as well, short scalp. However, this long, it didn't snag the exact bottom. It actually entered here on this candle before all of this drawdown. However, it did not get stopped out and it stayed in the price action. Now, here, it had just barely missed the partial take profit, which was kind of unfortunate. This was after I tightened the risk management. So I'm not going to go back and tinker with settings and do another rolling update just simply because one past trade was like 1.5% off from taking apart. Like there's no reason to be doing that, right? Like if it's working overall and it's profitable overall, I'm not going to adjust settings for everybody for the sake of one previous trade. It just doesn't make sense, right? However, it still was a winning trade, right? The price action was really slow after this bounce back, and it pretty much stayed stagnant all the way through here until finally up here. It wasn't here, it was actually here that it had barely missed the partial take profit. I thought that we were going to pop up a little bit further. See, I can't bring it up right now, but it was literally like 0.5% or like a 3/4 of a 1% from partial taking profit here. So luckily by then the risk management system stepped in and the stop loss stare also stepped in, and it ended up being a winning trade anyway. Okay, so it ended up getting stopped out here in profit for I think like 1.5% or something like that. Now, unfortunately, after that, this did take a loss, and this is the first substantial loss, like the actual like full 3.5%, which is the cap of how much any trade can lose with the strategy on spot. And this is the first time, I think in over 40 days where it had actually done that. In 40 days, it had only taken 3 losses total. This was one of them. The other 2, I think, were both like 0.5% each. So in total, I think for 40 days, it only had 4.5 or, whatever percent in losses here. And the funny thing was that this short went in the exact opposite direction. It ended up closing out. And what was funny is that you notice here, this is very interesting. And this is why I love my algo so much, is it stopped out here and it immediately shorted 10 minutes later, because it's a 5-minute time frame. It immediately shorted 10 minutes later and it won back that entire loss plus some. So like it shorted the bottom here. It won back the entire thing, took partial profit, stayed in the short, and then decided to flip long basically at the bottom here. And it's pretty much been long ever since. This has been back and forth. It's experienced some drawdown. If we draw a line across the screen here where the entry is, you can see the price has been fluctuating back and forth through here. It's had, positive gains. It's had some drawdown, a little bit of positive gain, drawdown, positive gains. Now it's just kind of bouncing back and forth. So this trade is still profitable right now. I don't think that it's been enough for the actual, no, it's not a swing trade algo. This is a scalp. This is a 5-minute time frame. How's it going, Nick? Good to see you. Anyway, yeah, so this is a scalper. I mean, this is a 5-minute time frame here, okay? You can see back through here, it was really, really active through here, shorted, took profit, okay, longed here, shorted the top, longed, took, exited because of the risk management stuff, shorted here, and then this is where we pretty much started like the week from, okay, or like last week, okay? Because it was in this long since before our week started. So I started here. But overall, if we take a look, this is the back test, right? So, well, not the back test. This is back test and live results combined because it's a 5-minute chart. It only goes back, I think, 5,000 candles or something like that. So if we actually look at this, the first trade on this is back from 426. Now, granted, I didn't actually push this specific rolling update until I think it was last week. But I had been watching this for an entire month, like since this. So this was all trading live price action. It's not actually a back test. So if you look at these trade results really carefully, you have to also take into account and you have to watch where these entry and exits numbers are, okay? So I was getting a lot of questions about this when I post the actual trade log, and I just want to explain this real clearly for you guys before we move on and look at the price action. Is from the beginning of the week, I guess, where we started was like from the 3rd, but it was already in a trade since here. Okay, so starting from this trade, right? If we look from here, okay, we longed and then we partial took profit. Okay, now if you look, since this was a partial take profit, this next long, this isn't a new entry. You can see here that this entry price, 30,313, is the same as this position. So these two are the same position. This was where it physically exited the long, was at 30,616. Okay. So that's where that was. That was an almost 1% win. This was that loss we took. Now everyone was like, oh, Cobra, you posted this and it's showing that it took 2 losses. Well, if you're subscribed to this, you would know that no, it didn't take 2 losses back to back. What ended up happening was, again, you can see here, it was a partial, the exits, okay, since it's a risk management system, it shows up as a take profit because it's a partial close. Now, I know that this isn't denoted as a partial close here in TradingView, but that's strictly a TradingView thing. If you look at the numbers for the entries, this is where you can find this discrepancy. It shorted at 30,379, and then it closed that position here at 443. Okay, 31,443. So that's what happened with this. Okay, it's just a TradingView thing. I don't know why it does this. It doesn't do that on Astrobit. No one's had any issues with it. But I wanted to point that out because I had a lot of questions and DMs about, oh, well, it's saying that it took 2 losses, but I had to point out these physical entry levels. So if you dive deep and you really pay attention to where the entry and exit prices are, this trade log will make more sense to you. This is why I prefer to do this instead of physically going into and making a separate Excel spreadsheet. I mean, this is live. Like I'm showing you the physical, the physical algo here on my screen. This is the physical layout that triggers the signals to Astrobit to make trades if you're subscribed to it. I can't really disclose more than that and be more transparent than that, right? But anyway, this is the current long. This doesn't update live, so this is probably maybe a little wrong. Maybe it's a little more or less than this. I'm not sure. But you can see here, this loss was 3.81, and then we immediately got that right back with that next short here, okay, which closed out and basically wiped out that long or that loss. And now currently we're sitting in this long position, which has literally just been going sideways through here. So slightly profitable at the moment. We'll have to see how it goes. Now that leads me into getting into some actual sorry, I'm reading the comments here. Is it a swing trading algo? No. Been lurking in the Discord and Astrobit. Got to do some more research on it next week or so. Yeah, man. Check out my website. It's linked everywhere. Should be on my main page for YouTube, cobra-trading.com. I know it's linked all over my profiles, including, I believe, my Discord profile as well. If you click on my name, there should be a whole profile card that comes up. Should be in there too. You can check out my website. You can check out Astrobit's website. I do have to update the screenshots that are on Astrobit's website. However, on my website, on cobra-trading.com, they are current as of the day that I pushed this live update, which was, I guess, just last week. Okay. So yeah, research it up. I mean, so far, VENOM Algo has been absolutely killing it all through June and so far in July. It's just absolutely been killing it. The first month of May, when I released the initial version and we went live after beta, it took a pretty significant set of like 2 or 3 losses before I had tightened up that risk management. And that was the reason for tightening up the risk management. So while it started off a little rocky, all of those losses have since been regained. I know that Cam, if you guys know who Cam is, he's actually one of the marketing guys for Astrobit. I do some video editing work for him and with Astrobit. And he actually DM'd me today and sent me this. And you can see here, this is his Cobra Go Burr, and he's trading it on Apex. And you can see at the very beginning of May, it got absolutely crushed with like one huge loss, another loss. It had a small win and then another third loss. And then ever since it hit June, it's like literally been like up only since June. Certainly regained back all those losses, and now it's nothing but green so far now. So this is really good. This is his personal. I don't know if he wants me to actually share that, so kind of maybe ignore that. But anyway, let's go ahead and we'll get into the charts. So anyway, as much as I can, I always try and be as as transparent as possible with you guys, right? I don't do spreadsheets because when I do spreadsheets, people yell at me and they're like, "Oh, the spreadsheets can be faked." And I don't post images because they're like, "Oh, how do we know that those are the real results?" And it's like, okay, so I can't do spreadsheets, people bitch. I can't do images because people complain. So what can I do that people are like, it's irrefutable that no one can refute? It's like the only thing that I could think of was physically once a week going live and physically showing you the actual chart layout that triggers the physical signals in TradingView and show you the actual trade results every week. Like that's really the only thing that I can do. And honestly, it saves me time because who the hell wants to keep a spreadsheet updated, right? That's a pain in the ass. Yeah, I know there's ways to automate it. And another thing was somebody suggested, oh, well, why don't you use CoinMarketMan? It's like my Forex book where it live logs all of the trades and everything. And I did that at one point. And then I started getting complaints about that too. Well, how do we know that that's the algo trading it and it's not your personal trades and you're not just doing it manually? And I was like, bro, whiskey. On what account size? There's this stupid emoji button here and I can't see. What does this say? Hold up, let me resize this window. There we go. On what account size is that P&L? I believe it's 1,000. I think it's 1,000. Yeah, I believe I have it set to 1,000. I don't want to dox anything, so I don't want to like, well, let me just bring it up over here. Hold on. Let's bring it up over here so you guys can't see it. What does it say? There we go. And now I can bring it back. I just didn't want to dox like the actual inputs and stuff, right? So initial capital 1,000. Order size is 100% of equity. That's pretty standard, but you can adjust that on Astrobit settings. It does not pyramid, so it doesn't dollar cost average. However, I've been considering adding that as a new feature. And it does account for trade commission as well, which is most of the reason for the risk management strategy. Okay, so keep that in mind. It does these trade results that you see, it does account for commission. It's all net, and it does initial starting capital was $1,000, which in my opinion is very small. So yeah, it accounts for fees and all of that stuff, not taxes, but it accounts for the trade fees. And order size is 100% of equity. So every time it makes a win or a loss, every time it enters a new trade, it's doing it with the entire account balance, i.e. compounding. That's basically what that means. So, and again, you can adjust the leverage. You can adjust the amount that it takes per trade. You can adjust the amount that it trades with your portfolio, which is another separate thing. So let's say you've got $1,000 in your trading account, but you don't want it to trade with 1,000. You want to trade with 500 manually, and you want it to trade with 500. You can tell it to trade with 50% of your account. And then you can also change the order size to, instead of using 100% of that $500 every time, you could change it to like 75% or 50%, if that makes sense. But anyway, there's tons of more details in that in the Astrobit Discord. Go sign up, make an Astrobit account. Okay, there's all these wonderful links down in the description below. Hope that answers everyone's questions. If you guys have more, let me know and I'll get to them. But anyway, I'm gonna start with this weekly chart first, and then we'll get to the lower time frames. You guys kind of know how I roll. So weekly chart is looking absolutely fantastic, and I posted on everything is percentage based. Doesn't matter what the account size. Yeah, it's all percentage based just for ease, right? So that's Nick's totally right on that. And it just makes it easier for everybody, I think. It's, just makes it easier if it's percent. Anyway, you should really only be looking at percents anyway. Like when you're trading, it's the percents that matter. It's not like dollar amounts or anything. What would be the reason to trade on 2x leverage with 50% of the account versus 1x with 100%? I mean, they're really just to use leverage, I guess. I mean, if you're trading on 2x leverage with 50% of the account versus 1x with 100% of the account, there really is no difference, right? So if you're using if you're using $1,000, but you're only using 50% of it, but using 2x leverage, it's like you're using the entire 100% balance. I guess the only reason to do that is if you were using an exchange that didn't let you use a sub account. But at the end of the day, even if you were doing that, you wouldn't really be able to trade with that other 50% because it would be your margin for the leverage. So I don't really know. I prefer to just make sub accounts with them and just let it trade whatever I put in it 100%. So if I put in 500, I let it trade 500. If I put in 10 grand, I let it trade 10 grand. And I'll just make a separate account or a separate sub account or whatever for like my manual trading if I'm manually trading on the same exchange. But anyway, let's go ahead and get into the charts here. I posted, I think it was yesterday, last night, maybe today. I just don't understand why everyone is like, oh, it'd be nice when the bull market starts. When's the bull market going to start, man? When bull market? It's like, where have you guys been for the entire year? We've basically been up only. I mean, like, does that look like a downtrend? This is 1 year of price action about. Okay, like we're almost, we're 6 months away. We're halfway through this year. This is from the beginning. This is 2023 right here. I'll draw a line. Where is it? Here. That's the beginning of the year. It's literally been up only since then. And if you measure that from the year open to where we are now is 83%. To the high, it's 90. So, I mean, we're up 80 some percent in 6 months. It's like, what do you mean? We're still in a bear market. It's like ever since we broke these local highs at like 23,000, like that was it. And we front ran this retest here. Okay. On this wedge, this is something else that's really important that no one paid attention to is when you see this kind of price action, like grind down and everybody's hoping for 23, everybody's hoping for a 20K retest or whatever, and it gets front ran, forms a wedge, and then breaks out to the top side, that's extremely bullish. I personally think that it's possible that this run could be coming to an end. And my reason for that is strictly based off of Elliott wave theory. This is clearly a 5-wave impulse here. Whether or not we've actually bottomed is yet to be seen. I'm in the camp that we have. I'm in the camp that 15.5 or whatever was our lows. And the main reason for that is because most bear markets with Bitcoin historically have seen retracements between 75 and like 85 or 88%. And this one from top to bottom was right there at 77.5. So I'm in the camp that, yeah, we probably saw all of our downside. I mean, even after all of this downside and we saw FTX capitulate, the FTX capitulation, the whole move was really only 20%. So while that's massive, right? At the end of the day, compared to everything else that happened during our bear market, yeah, I'm more inclined to think that this is probably over. Now, the only way to be sure, there's two possible counts here. If you're an Elliott wave guy, there's 1, 2, 3, and this is a 4, which at this point doesn't make sense to me because this is now 5 waves. This isn't, if this was our top here and we broke down from here, which is what everybody was thinking we were going to do until they noticed this wedge, everybody thought that this was a 3-wave sequence and this was our 4-wave and we were coming down further. In my opinion, obviously that got invalidated, right, on this impulse. So that makes this a 1, 2, 3, 4. That makes this a 5-wave sequence, and we're going to end somewhere. My guess would probably be up near, 35, 36K up in here, right? That would be my guess. And that would make this overall count be 1, 2, 3, 4, 5 for a really short 4 compared to our 2. This is 100% possible. And then this kind of a 5-wave sequence would be a 1, right? So this would be an A, this would be a C. Clearly, this is 3 waves. Like this is undoubtedly a B wave here. And then this is a C. This is a 5-wave sequence here. So that's kind of the A, B, C. And that's our correction, right? And that's just kind of what we got. We had a double top and we had a really long C wave. I'm in the camp that, yeah, we're probably bottomed here. Like this is probably our bottom. This is our macro bottom for the cycle. And now we're starting back up. Now, does that mean that we're going to continue straight up from here? No, of course not, especially not with all the uncertainty about regulations and things like that. But what you have to remember is that in terms of structure and just price structure in general, whether you're an Elliott wave guy or not, I only use Elliott wave to identify the price action. As I just showed you, to me, this is impulsive now because we broke these highs. Okay, we broke these highs. This candle, this doji on the weekly chart closed above these highs. That makes whatever kind of corrective thing that this was invalid. That is irrefutable. So that said, could this be a really short 5-wave and now we correct and we see some kind of dramatic correction here? Yeah, that's possible. 100%. I mean, these dojis here aren't looking super awesome, but at the end of the day, I said that back in April. When we got these dojis, I was like, oh man, triple dojis at a top, not looking so hot. And then what happened? We got one last blow off and then we grinded down for like an entire month before we got this nice breakout here. But again, what we're seeing so far, one doji, looks like we're forming another one or spinning top or something. It's getting a little shady now, considering that we did close above our previous high. Only by one candle, but regardless, we made higher highs here, okay, compared to this high. So that's irrefutable. Any kind of like 3-wave sequence here just got blown out of the water by this happening, okay, because we made higher highs. That makes this, no matter what, no matter how high we go from here, that makes it a 5-wave sequence. That makes this impulsive. So, in terms of large pull, would I be expecting a super large pullback like right just now and we like red dildo it like fucking 20%. No, I'm not going to make that kind of outlandish prediction. But over time, like until the beginning of the year or something, could we see another grind down to, the 24-ish, 25-ish area, maybe even deeper, and see a retest of 20? Yeah, that in my opinion is totally plausible. But at the end of the day, we got to just be really careful here, and we have to play it level by level. So let's come down to a daily chart and kind of dig in here. Okay, so this is that wedge, that falling wedge. Okay, in more detail. Really, really nice push off this bottom. Everybody thought that we were going to break down here, and it just absolutely just traumatized the bears. Hardcore. Yesterday in one day, it was in one day. It got invalidated yesterday, but 2 days ago, we put in our high and our lows for July. Yesterday, we put in new lows. So our July low currently stands at 29,888. Our current July high is exactly 31,500. And our June high, which has now been swept, was previously at 31,431. So while this looks awesome, again, refer to that post that I think I tweeted out yesterday or today. That was like, everyone's like super bullish or bearish on these little $300 moves. Meanwhile, we're sitting at a massive yearly resistance level that goes all the way back to our bull run in 2020, 3 years ago. This is a super historical level here. Okay. You see how these levels line up perfectly. It's because I just made separate boxes for them. Normally, I don't like dragging over one box all the way across the screen on high time frames like that. And sometimes like this, you can see over here, sometimes this level was the same here. However, over here, levels started to shift. This level here that was defined does not line up with anything over here. Like it just doesn't make sense here. So that was at one point where the levels kind of shifted a little bit. But I have that same target box over here. This is my target for an overall high. I think we do get a blow off between 35 and 37K. And I think that that's going to be like the end for this kind of a run. Now, another thing with that too is, if we come down to a 4-hour chart and take that stuff off the screen, we can measure this by, let's see, this is a 1, this is our bottom of our 2. So this whole thing is our third wave, right? That would be the bottom of our 4. So that box, right? Basically up here, okay? That golden pocket between actually, I think it was a little higher than that. Was it up here or was it? Yeah, a little higher, about 768 up here or 764, whatever up here. I think that that's probably like our max, like that's our max target. A more conservative target would be like 33K in my opinion. RR ratio, higher leverage, less capital risked, but also increased risk, in my opinion. Gold will need to break through the weekly triple top for Bitcoin to crap below 22K. That won't happen, in my opinion. Gold, yeah, gold hasn't. Man, that's a tough one because while I don't have very much hope for gold to be breaking out that high, it's also kind of the thing where everything else that I've ever seen on a macro time frame that I'm just like, oh, that'll never go to new highs. Oh, it'll never happen. Nah, that won't happen. Every single time that I've said that, like with determination and like really high conviction on a macro time frame, almost every time it's happened anyway, just because everybody else is thinking the same thing. Oh, it'll never go that way. And then like big whales and like institutional investors, they'll just do it to like, fuck the puts, and they'll just rocket it up and they'll manipulate it. Gold is a lot harder to manipulate. Obviously, you need a ton of liquidity to do that. But we all know who has the most liquidity, right? Citadel, Ken Griffin, what's his face from BlackRock. They've got tons of bankroll to be able to manipulate markets like that. So we'll have to see. But in general, I do agree with you. Do I think it's going to break through a triple top? no. I mean, that's like a pretty massive reversal pattern. And sorry for not getting back to you on Twitter about that post. I was busy, but I did see your tweet asking me my thoughts on that. And yeah, it's a reversal pattern. Do I even have gold? I don't think I have gold on this watch list. I'll just add it. Why Bing X? What? Yeah, I'll just use the Owanda one. That's fine. Yeah, it's just the absolute massive triple top. This thing is hilarious. I mean, it is just a absolutely massive resistance here. This should obviously be red, but yes, this is what Nick is referring to here. So another thing that we can look at is we can look at the actual spot OBV here, and if we bring this up, where did my freaking drawing go? Come on, man. There we go. Bring it up to a weekly. Take a look at the OBV. So OBV here. Higher high, equal high. That was bearish. So that was the downturn here. Lower low in price. Higher low in OBV. That was the bullish run. And now we're getting a lower low in, or a lower high in OBV and another equal high in price. So yeah, that looks to me, I mean, with that drastic, yeah, like equal high in price, like that's called exaggerated divergence. For whatever reason, gold has been like really playing hardcore the exaggerated divergences, which are actually the weakest. But the other thing too here is that, you know, the RSI has got room to run and the momentum here is flipping bullish. So do I think that we break these highs and we just like rocket to like 2,500? No, probably not. Do I think that there might be some kind of a blow off here? I wouldn't count that out, but that would be definitely the deciding factor, because there's no way that the MACD is coming up and making a higher high from this after it dropped down so far here. Like there's already divergence here on the MACD. If you guys can spot this, the MACD is making a lower low. The price action is making a higher high, a higher low. Okay, so yeah, this situation here is looking pretty bearish to me. Anything is possible, but I would tend to think that with the volume per bar, especially like really dying off through here, that's a really significant drop off in volume. I think that this is probably pooped out here. It's just tried and it just can't break through it. For 3 years, it just cannot break through 20,050. You know, every time gold hits 2,000, people be selling. You know, I mean, if you got physical gold and it hits 2,000, but you bought, you know, you were averaging into gold, you know, since, you know, the early 2000s or whatever, back at, you know, 600, 800, 1,000, even 1,500, even. Every time gold hits 2,000, it's just like that real psychological number, huge resistance, and it just keeps shitting the bed right there. So weekly, I think it's going to test 400 MA. I don't really use moving averages too much anymore. I mostly just go off of volume. Moving averages are nice, but I don't really use them too much anymore. Anyway, let's take a look at S&P 500 here. So let's come down to this daily. So this was something that I got a lot of people were trolling me for this. Like, oh, yeah, you got this big fucking wedge or whatever. Now, granted, we've been making higher highs and higher lows. Okay. Like that is bullish. But at the end of the day, this pattern has been staring me in the face, and it's just not something I'm going to ignore, especially when the entire time here, the overall volume of retail has just been absolutely getting destroyed, especially since about this time last month. Okay. We've got huge divergence here. Now, I'm not saying make trades on divergence alone, but when you have 2 or 3 or 4 different indicators that are all showing you divergence bearishly on a macro time frame, that should probably throw up some red flags to you. Okay, it really should. Even here on the MACD, you can see what's happening here. This was basically a flat top, and now we're getting this. Okay, so now that's OBV, RSI, and MACD, all bearish divergence. And throughout this entire thing of the price going up, all of the overall volume has just been going down. I'm sorry, but when I see a massive rising wedge that's been forming on a macro time frame on a daily for a year almost, I'm sorry, man. Like, that's just not something that I'm going to ignore. Does this have to play out? No, but I'm definitely going to take it into account and be very cautious. It's just one of those things. Like, I think if we break this is my magic number here. This is my magic snake number. Okay. 43.25. You break back below 43.25, chances are it's over and you're at least retesting the 4100s, in my opinion. This will break structure because this was our last pullback. That breaks structure. And what I would personally be expecting, where is my thing? I would personally be expecting something like this, where if we do come down and we break these lows here, something like this, okay, that would be my guess. And then if this doesn't hold, that's it. Like, this whole thing breaks down and you're coming way back down. That would be a disaster. It would take probably a big fundamental, like some kind of a black swan. Like, a black swan can be anything, right? It could be a flash crash. It could be a pandemic, like in 2020. It could be Jerome Powell at the end of this month being absolutely super hawkish and being like, we're going to raise it another 50 basis points and doing something fucking outlandish that no one thought he was going to do. And it could be a news event like that. It could be CPI numbers next week, right? I mean, these are things that we have to take account. That's why I go over like what's happening with the legacy markets. What are the numbers that are coming out that we need to look forward to? Those directly affect legacy markets. And honestly, I'm not expecting the CPI and the PPI numbers to be that great. And yeah, I think that this might continue down. If it doesn't break these lows, I think that we certainly retest this. Now, I'll be glad to be wrong. You know, if we invalidate this whole wedge and actually break out of this with force, sure, I will eat my words, and that's that. I would love to be wrong on this wedge that's almost a year now forming, but I'm not gonna ignore this. Every single time that I've ignored something this obvious on a macro time frame, I have gotten majorly screwed. Granted, classical charting patterns are really only 70% accurate, but am I going to bet the farm on a huge pattern like this invalidating after it's been forming for almost a year? No, I'm not going to go all in on a long right here. Like, that's definitely not a thing. Will I have long exposure? Yeah, but probably on like, like week or month expiry calls, or, like options or something. But at the end of the day, I mean, like, for the last 6 months, this has been, since March, this has been a seller's market. This has been a seller's market. Okay. Like, if you bought down here and you've been buying these lows, this has been a seller's market since March. So for an entire quarter, right? There's a whole quarter's worth of price action. It's been up only. So if you bought any previous time, like, this is where to be selling here. If you were averaging in, you bought some here, you bought some here, you bought the dip. Okay, you sold, maybe you sold a little here, you bought the dip again, you sold a little here, and then like this would be like another sell here for me. Like, I would be selling into this price action, not buying into this price action. You want to sell the rips and you want to buy the dips. Okay, that's just my 2 cents. If we take a look at the dollar has just absolutely been nuking. And normally when the dollar is nuking, indices go up and Bitcoin goes up, and Bitcoin and the indices, as I just showed you, haven't budged off of this, which is a little concerning to me. That's not necessarily a good thing. It's not necessarily a bad thing. but it's just something worth noting. We have seen something like this happen where the dollar will be a leader, and then we'll see some kind of a move. But so far, I mean, dollar is looking like absolute garbage today. And meanwhile, you know, when you look at normally when the dollar nukes like this, Bitcoin absolutely rockets. And Bitcoin, for the most part, is doing a bunch of nothing. It's just chopping. It's just going sideways. It did nothing. In fact, it looks like it actually went down with the dollar today, which is very weird. So if you guys can make any sense out of that, let me know. But that's pretty much it. Let's see. Went over S&P, went over Bitcoin. Oh yeah, my natural gas. So I think my average in this is like 207 or 270 or something like that. I forgot. No, not 270. I think it's like 207. I think 207, 208. I have to check in my Fidelity account. But I was averaging in on this support for a while. Not on this first dip and not when we almost lost it. But once we recovered here and we met these equal lows, I bought again, and that's pretty much it. I've just been waiting on this entire time. I really do think that we're probably just going to see a bounce off of this trend line. And if we do break through this trend line and we do revisit into this box here, I will gladly average back in again and buy, you know, as close to $2 as I can, because it's the summertime. No one's really using a lot of natural gas right now. Prices tend to go up, you know, at the end of, like the winter time and stuff. And I think that we're going to start seeing that recorrelation here. So that's probably going to end up being one of my real big watches that I'm watching very closely. Same thing with bonds. Bonds have been like really all over the place. We're testing highs again on 2 year, like the short term bonds. You know, 1 year's breaking out to new highs again that no one's talking about. 6 months broke out to new highs again that no one's talking about. 3 months has been breaking out to new highs and just kind of like really, really grinding upwards. No one's really been talking about it. You know, even if you bump up to like a 10-year, I mean, look at this. We're retesting highs that we haven't seen since March. Okay. And this is on a tear. This was a super nice consolidation here and a really nice retest too. Okay. Really nice triangle pattern here. Boom, broke out, retested, kept going. This is really nice. I think that this is due for another continuation. When bonds keep going up like this, it's because the value of the dollar, like I just showed you, the dollar chart's going down. That means bonds are going up, and that normally means equities are going down. That's just kind of the way these things are correlated here. I really think that we stand a good chance of retesting highs on a lot of these higher term bonds. I mean, this is crazy. Like, look at these yields, man. These yields are crazy right now. I mean, like, look, this again, we're breaking highs. We just closed above this. We closed above here, which was since May. We closed above here, which was from March. I mean, damn. What's the 30-year? Even the wow. See, this is concerning for me. This is probably the most concerning because the 30-year typically moves the slowest and is the most laggy out of all of them. And this is really concerning. This is 1, 2. This basically was a triple tap resistance, just like gold did, except this is breaking out to the top side. This is concerning. I'm not making a comparison to gold. I'm just using that chart, the physical price action as a comparison here. This is triple topping and it just broke out. And this is looking like it actually closed above this high here that was in March, and it closed above our highs in 2022. So this is kind of a big deal with this yield. This is pretty impressive here. What's Apple doing? Apple is going up, but it looks like it may be running out of steam here. Yeah, see, like this is the biggest bullshit. like this is the kind of thing that really pisses me off with trading. Like there's no with this little volume, there's no reason for this to have gone up that high after this move. Okay. From here, with this low ass shitty volume, there's no reason why this should have gone up 35%. And the only reason why it did is AI. Stick these Google fucking things on your face or whatever. Is Apple a pioneer? Yes. Did they pioneer the iPod and that blew up and it led way for, the iPhone and all of that stuff? And yes, they did. I will grant them that. They're pioneers in terms of like, trending, like creating new trends in technology. Like I totally recognize that. I'm not going to, shit on them for that or whatever. But in terms of just the technicals on this, like this is the kind of chart that really pisses me off. This is the kind of asset that I'm going to be staying away from. This is literally all hype. Like this low price action, this is not this is not institutional investment. This is retail. This is just retail pumping up price and just buying and buying and buying. Every little dip, buy. And the volume is just like garbage, and it just keeps going lower and lower. This is the kind of chart that I tend to not trade, is because the volume just does not line up with the price action. Volume, in my opinion, is king. And, this is, you know what they say, stairs up, elevator down. And I really think that that's what's going to happen with this. This is just going to fall off a cliff at some point, and you're going to see a drawdown huge and a massive panic sell off. I think that that's what's going to end up happening with Apple. So if we look at the FANG, those of you that don't know, the FANG is basically just an index of all the $1 trillion club IT companies. So like Alibaba, Facebook, Meta, or whatever, like Nvidia, AMD, Google. Okay. Obviously Apple is in there, Microsoft. Okay. Anyway, yeah, the FANG. This is starting to finally roll over. It's finally happening here. The FANG index is finally rolling over. And when you think about the S&P 500, where 5 stocks were the sole contributors to 95% of the run-up that the S&P 500 has seen this year, i.e. Nvidia, AMD, Intel, and basically the ones that are in the FANG, right? There's 500 stocks in the S&P 500, but only 5 of them contributed to 90% of the S&P gains. That is hugely weighted, like terribly. Like it's weighted really, really bad. This is why people that are trading off of the S&P 500 or just trading like S&P 500 ETFs like the Spider and stuff. This is why I think a lot of them are going to be in for a really big surprise. This chart is way more telling. Like if you just want to look at big tech, this is the chart to be looking at. And this really, really looks like it's going to roll over here, like really, really hard. We basically got equal highs, and we got a very, very dramatic lower high on the RSI here. The volume is really, really starting to tank off. We've got increasing bearish volume in general. The MACD looks like absolute trash. It's struggling to stay in bullish territory. And there's no OBV for this. Volume isn't measured for this one because this is a smaller index. But this looks to me like it may finally be rolling over. But if you look at the weekly chart here, I mean, like this looks absolutely ridiculous. But we are getting a cross. It closed today with a cross. So this cross is confirmed. That's looking kind of weary for the FANG. But I think I'm probably going to call it there. It's been about an hour. Let me know if you guys have questions or if there's charts that you want to see. And stuff like that. Again, in the description below, if you guys are interested in the Venom algo, Summer 30 gets you 30% off for 2 months of sign up, and you don't have to be a new member. I think that's like existing Astrobit members and stuff. Okay, so like you can still use it. But yeah, let me know if you guys have any questions, and also help me out. Smash that like and subscribe button. Yeah, I'll finish my whiskey here with you guys. Maybe take a quick toke. and probably go ahead and end the stream. I finally hit my time limit. Finally did it. Right at 1 hour. I finally got it. Yes. Super happy about that. I fundamentally believe copper is the best leading market indicator. Copper? Really? I think I have copper futures on my this is copper, right? Yeah, copper. Well, I love NAS 100. Yeah, a lot of people trade NAS 100. It's quickly becoming like a lot of people's favorite traded asset, to be honest. Wow, this is some really dookie price action. Was this that's the 2008 crash. So what did this do in 2020? Copper didn't budge in 2020. I mean, this was, I guess, the 2020 crash, but like it was already in a downtrend. That's kind of crazy. So yeah, that's kind of a leading. I would say that's a leading indicator because everything leading up to the COVID crash was like in up only mode, and this one was trending down. So everything is trending up now, and copper is trending down. In fact, that's actually a really nice trend line. Ooh, look at that perfect 3 touch. Ooh, ooh. Yeah, it's kind of spicy. Look at that. It's like a perfect 3 tap. Bingo, bango, zango. That's freaking awesome. Yeah, this one is trending down. I'll share my screen real quick. Look at that little 3 tap right there. Bing, bang, boom. That's fucking awesome. If you're one of the guys like me, I tend to try and get as many wicks in as possible. So I would probably move mine down to here, and do like, one of these numbers here. Okay, get 1, 2, 3, 4, 5, 6, 7, 8, 9 touches. That's probably the trend line that I would personally trade off. Like if I was going to trade and take that trend line into an account, that's where I'd probably place it. Man, yeah. I would definitely call that a leading indicator. So, I mean, let's bring up a double chart here. Let's bring up SPX. Oops. 1 week. 1 week. Get that off the screen. This goes back from where? February. Where is February here? February. So this bottomed in July last year. July, August, September, October. Wow. So this was a whole quarter ahead when it started bouncing. It was almost exactly 90 days ahead. This was 10/10 when we bottomed, and this was 7/11 when it bottomed. So almost 30 days to the dot early of a bottom here. So where did this top, our most recent top here was 117. 117. So this is interesting. Good job on pointing this one out. This is very, very interesting here. Because I mean, if you do look at the most recent price action, I mean, this clearly has been down for the better part of the year, and this has definitely been up for the better part of the year. Like if we take these both down to a daily chart here, and you go back to 2020, nope, not 2022, 2023, right here, okay, the beginning of the year. Let's bring this back to 2023. I mean, yeah, that's 100% without a doubt. That's definitely inverse correlated. Like you definitely are making lower lows, and you're definitely making lower highs here. You're definitely making higher lows. Okay, here, for the most part, low, higher low, higher low. Okay, That's kind of impressive. And it looks like the trend seems to be about 1/4 off. Yeah, that's a very interesting relationship with this. But see, this was correlated from 2022. That drop was correlated here. Maybe it flip flops back and forth based on some other. I feel like I'm missing a piece to this because it's been inversely correlated this year, but last year it was positively correlated. So like all of this, now granted, this was a lot more rocky on the way down, right? This was a lot more rocky. This was a lot more straight down. But this in 2022 was correlated. However, this bottomed sooner in July than this did. This had another lower low. And this one didn't. This started to reverse. And that's when it became uncorrelated. This was right here. This was where it became uncorrelated. Right here for the year in 2022. And then ever since then, it's been kind of inverse correlated. Like, and it's weird too, because this move is correlated up until what? Beginning of the year? Yeah, about. Yeah, this is interesting. I feel like I'm missing a piece to this, like something like a determinate, like some commodity or some index that would kind of determine when these are going to correlate or switch to inversely correlated, because they've been both. Like it's not 100% inverse correlated, but it's not 100% correlated either. So this is a really funky chart. I'm going to have to do some research into this and do a little more digging on this, because now you've sparked my interest. This is interesting, but I feel like there's a missing piece to this and I can't put my finger on it right now. It might be because, I've got lights on in my face and, I'm talking to people on the internet. So there's like a little pressure with that, but I feel like there's a missing piece here, like maybe some other commodity or some other index or something that would determine when they flip and when they don't flip, in terms of correlation with each other. That's very interesting. Is it? I wonder, is it the dollar? Could it be that simple? From 2023? Well, let's look back at 2020, as far back as 2021. Whoa, a lot more price action here than I thought. Okay, so that's 2021. Popped in September. In March. So that's before. Way before. Yeah, no, so it's not the dollar. Oops. No. Oil. This was a lot more rocky than oil's ride. Yeah, I'm gonna have to dig on this. This is interesting to me. I'm gonna have to find out. Yeah, it has something to do with the amount of delay. It's like a 3-monther, or at least for like from what I was noticing, like on the daily chart when I just looked at like from 2022 and on, it looks like it's about a 1/4 difference. The amount of inverse correlation is the only thing to watch for, the amount of inverse correlation. Yeah, it's almost like when this got a higher low, or the S&P, right, got that lower low, and this had a higher low back here. It was like that's when it was like, okay, like that divergence between these two charts, not necessarily the price action, but the divergence between the price action on these two separate things is like what determined it to re-correlate for a certain amount of time. And then it only stayed correlated for about, what was this? 10, 12, yeah, 11, 12, 1. That's weird. That's weird, man. When copper is massively inverse, watch out. Yeah, like I feel like this kind of is massively inverse right now, to be honest with you. Like if we're really just looking back at like 2023 price action, I feel like the most recent price action is going to be very, very telling here. Like this immediate dip and what we're seeing here is very like, that looks very correlated to me, right? Like this. That looks pretty correlated to me. But I'm thinking if this ducks down and this makes a lower low in price, but this makes a higher low, I'm thinking that's going to be like if we see something like this and then it bounces and we see another higher low here, but a lower low here, I think that that's going to be like the telling sign. Like this ends up like we end up making a higher high on copper. We end up making a lower high here. And then this just collapses. Whereas this just pumps. So that might be what ends up happening here. Wow. This is like some crazy alpha that I just saw. And Nick, like good call on coming up with this. I mean, wow. I mean, like this is definitely sticking out to me. Like, I think you got something here, dude. I think you got something here. That's very, very interesting. And the last time that there was a big miscorrelation, it was because of the divergences, the difference between like the divergences on copper and on S&P. So yeah, I really think that if we do something like this and get a higher low here and bounce, but we get a lower low here on S&P 500, I think that would be, yeah, that would be the uncorrelation. That's probably when we'd see another bear market for S&P 500. Wow, that's crazy. You just blew my mind, dude. That's crazy. That's awesome. I'm glad that I went over stream by like, 10 or 15 minutes to go over that and really dive into that. That's really cool. But anyway, I think I'm going to finish up here, guys. Thank you very much for tuning in. I always appreciate it. Make sure that you like and subscribe. I do this every Friday, and on July 26th for the FOMC, I will be live trading / streaming that as well as I normally do. As always, I'm going to go ahead and I'm going to finish up my whiskey here. And then we'll probably call it a night. But yeah, this is a really cool stream and really awesome at noticing that that weird correlation, like inverse correlation between copper and S&P 500. Like that's really cool. Like that kind of blew my mind. That's going to be something that's very interesting that I'm going to be watching out for. Because I think that if we see something like that in the near future, then it stands a good chance to be like a long-term, something that you would watch for long-term, right? Like, oh shit, like, hey, we're seeing bullish divergence on copper, but we're seeing bearish divergence on, or, we're seeing higher lows on copper, but we're seeing lower lows on S&P 500. Holy shit, maybe it's happening. Like that might be like a long-term thing to be watching between, copper versus S&P. And it's such a weird thing, like copper versus S&P 500. It's like, that's so weird, but I mean, like it's undisputable. The price action is there. It's done it more than 3 times. Clearly there's a pattern there, right? Like there's a pattern. Like 1 time is meh, 2 times is a coincidence, 3 times, now it's a pattern. Also compared to the NAS 100 bid ask. Yeah, I'll take a look into that. That's kind of weird. I wonder why copper though? That's so weird to me. It's like, why copper? It's like the most random things. It never ceases to amaze me. Like every day, like this is why everyone's like, oh man, Cobra, you're such a good trader. I can't believe that you've been trading for 12 years and all of this stuff. It's like, dude, every day I'm learning. Like literally every day I'm learning. Like I never thought to look at the fucking differences or compare copper to an indice, but like, what? Who does that? Like, I've never even thought of that. That's crazy to me. So anyway, I appreciate all you guys joining the stream. Have a wonderful night, have a wonderful weekend, and I will be back here next week. Make sure that you check out all those links down in the description below. I didn't even get a chance to go over the heat maps today. I'll probably just post those maybe I'm going to be working this weekend. So I'm sure I'll have Twitter open or something and be watching like the Venom algo. So I'll post some heat maps and stuff probably tomorrow. But until then, I hope you guys have a wonderful, safe, and awesome weekend. I hope that you guys had an awesome July 4th for those of you that celebrate here in the United States. And until next time, happy trading.